What's going on, YouTube? Today we're going to be talking about taxes. We've heard Donald Trump talk about one big, beautiful bill, and this is just one aspect of that. Tax cuts, tax priorities, tax reform. We've heard a lot of things thrown out. We've heard Donald Trump campaign on no tax on tips, no tax on overtime. We've even heard him talk about getting rid of the IRS altogether. But we've heard a lot of things, but via the White House X account, they put out a statement from Press Secretary Caroline Levitt. She put out a statement and they headlined some of Donald Trump's big tax cut priorities. So we're going to watch this video and then we're going to get some commentary on some of these priorities. Some of these priorities he's campaigned on. We've heard about them: the SALT cap, the overtime pay, a lot of these things. So let's get into this video and then we'll get into these individual tax cut priorities.
So these are the tax priorities of the Trump administration that the president has laid out for members in that meeting today. No tax on tips, which is obviously a very public campaign promise that the president made. No tax on seniors' Social Security. No tax on overtime pay. Renewing President Trump's 2017 middle class tax cuts. Again, these are the president's priorities. Adjusting the SALT cap, eliminate all the special tax breaks for billionaire sports team owners, close the carried interest tax deduction loophole, tax cuts for made in America products. This will be the largest tax cut in history for middle class working Americans. The president is committed to working with Congress to get this done.
You heard it there first. Press Secretary Caroline Levitt. Now let's get into it. All right, no tax on tips. No tax on tips. So now, if you make or if you get paid hourly, if you get paid salary, this may not apply to you. This is not a tax policy or a tax cut that would just be blanket and would affect everybody. This is kind of niche, kind of. Now if you're somebody who relies heavily or your income is mainly tip driven, this is great for you. This is great for you. This will allow you to be able to keep more of that income tax free. Now, how can this be abused? If you're an entrepreneur, go get with the accountant. If you have a savvy accountant, you can go get with your accountant and you can restructure a portion, probably a big portion or percentage of your income and label that as a tip, and you can get some of that income tax free. Now, that is a way that it can be abused. Now, I'm pretty sure the people down in Washington are smart. They've thought of this. Do they care? We don't know. We don't know. This could just become another loophole that would allow entrepreneurs or high income earners to be able to take advantage of. Another thing they could do is they could put a cap, on something like no tax on tips. We'll just have to see. We don't really know. If you are in an industry that a lot of your income comes from tips, this is great for you. If you're an entrepreneur and have the ability to get with your accountant and take advantage of this potential loophole, this could be great for you. We'll just have to see. Maybe they'll put a cap on it. Maybe they won't. No tax on tips. This is something that he campaigned on. I don't think it'll have any issues getting passed, but that's that. Now, no tax on senior Social Security. This is something I'm already extremely, extremely, extremely questionable about when it comes to Social Security because I don't even believe it's going to be around when I'm of age to be a beneficiary of it. They absolutely obliterate my checks. I'm pretty sure they absolutely obliterate yours. They pull so much money out our entire lives for Social Security. And then when you're of age to be able to receive the benefits of it, they tax you again. They tax you again, and it's ridiculous. So I think this is something been that should have already happened. I'm a strong proponent of it. I think it only makes sense if you're going to take the money out. If this is something that we're going to pay into, when people are of age and they've put in their entire lives and it's their time to receive this benefit, they shouldn't have to pay a tax again. It makes no sense. Now, when you come to the IRS website, just to show you the thresholds, how ridiculous they are. Look at this: married, filing single, head of household, or qualifying widow or widower with 25,000 or 34,000 of income, up to 50%. Married, filing separately and lived apart from their spouse for all of 2020, 25,000 or 34,000 income, 50%. And married, filing jointly with 32,000 or 44,000 of income, 50%. filing single, head of household, or qualifying widow or widower with more than 34,000 income, 85%. Married filing jointly with more than 44,000 income, 85%. You see how ridiculous these thresholds are? Now, Donald Trump, when he was on the campaign, he said that it was going to be no tax on senior social security, blanket, nothing, zero, no tax at all. Now, will that happen? We don't know. Saying that on the campaign trail and it actually coming to fruition are two different things. Will he just adjust these thresholds? We don't know. Will it be the entire thing? We don't know. We'll just have to see. But me, I am in favor of this. I'm in favor of this. If you're going to pull it out of our checks, if it's something that, we're going to be paying into our entire lives, if it's still around, I would like to not have to pay taxes on it when I'm ready to receive the benefit. I think it only makes sense. But we'll see. You know, some things that make sense don't tend to happen. Now, another one that he campaigned heavily on, heavily, and a lot of, I know so many people that were extremely excited about the thought of this even being a thing. No tax on overtime pay. Now, again, if your salary, this may not apply to you. And that sucks. That sucks. But for those of you that are hourly, for those of you, especially blue collar, that, overtime is something that you work often, even entrepreneurs, this could be another loophole for you guys to take advantage of, to manipulate in terms of accounting practices. I think this is great. I think this is great. I am also in favor of no tax on overtime pay. I also work in an industry where overtime, is something that, hey man, I'm for it. I'm for it. I'm for it. No overtime pay. Now, is this something that I think that it'll just be no tax on overtime, blanket, clear across the board, clear cut? No. No, you know, and probably one of the main reasons is because of the loophole in regards to entrepreneurs. Again, they can restructure things in regards to accounting practices. They can say, oh, this income was, like I said before, the tips. Oh, this income came from overtime or that. You see what I'm saying? And it can get to a point to where, oh my God, just imagine, if they got their account. This is tips. This is overtime. They're getting all types of money tax free. These things open up loopholes for people to abuse these tax cuts. And we'll just have to see. We'll just have to see. But I think this will cause some of these things to have caps on them. They'll have caps. I don't think it'll just be clear cut, no taxes across the board. If that's the case, I'm for it. I'm for it. We'll just have to see. But this is another one that I am strongly in favor of. It incentivizes people to go out, work hard, and we should be able to keep, more of our hard-earned money. I'm for it. Things like this is part of the reason they're saying this will be the biggest tax cut in history in regards to its effects on the middle class. So we'll just have to see. This is another one that I love. Now, renewing the Trump tax cuts, I think this is something that will be extremely easy to get past. Nothing changes. It's essentially things stay as they are to what was passed back in 2017. Now, for those that don't know, the Tax Cuts and Jobs Act, the TCJA that was passed in 2017 by Donald Trump. Key takeaways: the Tax Cuts and Jobs Act was the largest tax code overhaul in 3 decades. The law created a single flat corporate tax rate of 21%. Many tax benefits that helped individuals and families will expire in 2025. I don't believe that's going to happen. It's going to get extended. And you can go, if you want to know about all of these things, I won't go through every single thing. You can go to, Investopedia or look up anywhere, really. It's all over the place. But the federal tax brackets, it dropped it down from, I think it was like 39 or something like that, down to, the highest tax rate being 37%. And it'll just be this extended. Nothing will change. The tax rates will stay the same as they are right now. And, that's all you need to know. It'll be extended. A lot of people said these tax cuts were for the ultra wealthy, for the rich. Did they benefit? Yes. Did the middle class benefit from these? Yes. Will the middle class benefit from some of the other tax cuts that we've talked about? Yes. You know, I think two things can be true at once. The ultra wealthy, yes, they may benefit, but the middle class will benefit as well. So we'll just have to let it play out. But, you know, in regards to renewing the Trump tax cuts, I think that's definitely going to happen. It only makes sense. It's already in place. Nothing has to change. We just extend it. See what I'm saying? Now, on to the salt cap. Now, the salt cap. Why does the salt cap need to be adjusted? What is the salt cap? Let's talk about it. So, the salt cap, the salt deduction, state and local tax is what it stands for. The state and local tax salt deduction permits taxpayers who itemize when filing federal taxes to deduct certain taxes paid to state and local governments. The Tax Cuts and Jobs Act, which Trump himself, we were just talking about, his 2017 tax cut. In that, he capped the salt deduction at $10,000. This is something that he did. Something that a lot of people are not happy about. Before, there was no cap on it, and now there is. And now people are in an uproar about this salt deduction. Now, how does the SAR deduction work? For those that don't know, taxpayers who itemize may deduct up to 10,000 of property sales or income taxes already paid to state and local governments. Before the TCJA, there was no cap to the value of the SAR deduction. In theory, the deduction exists to offset some federal taxpayers' liability by excluding income already taken in taxes for state and local government services. More taxpayers claim the deduction in states with higher tax regimes that provide more government services: New York, Connecticut, New Jersey. The state and local tax deductions disproportionately benefit high income taxpayers, violating the principle of tax neutrality, not to be confused with tax fairness. In fact, before the TCJ, 91% of the benefits of the SAR deduction was claimed by those with income above 100,000 and concentrated in 6 states: California, New York, New Jersey, Illinois, Texas, and Pennsylvania. So the SALT deduction, a lot of people are in an uproar. A lot of the states that are, in an uproar about this are Democratic states, surprisingly. But this SALT deduction, this is something that, wouldn't even have been a problem, but Trump put the cap in. Now, will he put it back to where it was? No cap. I don't know. I don't think so. We've heard him, kind of roll back on that and not have such a strong stance on that. A lot of people believe that he will just maybe raise the cap a little higher. You know, we'll just have to see. We'll just have to see. This is something that I'll be paying attention to, considering, I just built a house last year and now I'm able to get to the point to where I'm writing off things like this on my taxes. So we'll see. We'll see how this works out. But that's that. Now, let's get into eliminating special tax breaks for billionaire sports team owners. Now, this is something that won't affect the majority of us. 99.9% of us are not, billionaires who own sports teams. So I don't really care too much about this. This kind of goes against, the tax cuts for the ultra wealthy. This is something that, will negatively affect them, at least on the surface. So he'll get rid of special tax breaks that they have, but it doesn't really affect us. So I don't really care too much about this special tax breaks for billionaires, sports team owners, eliminating it. You know, I didn't really pay attention to it before. I'm not going to really pay too much attention to it now. Like I said, it doesn't really affect the majority of people. Now, closing the carried interest loophole, the rich getting richer, something that probably a lot of people don't really pay attention to, doesn't concern us. It doesn't concern us normal folk. This is for, again, ultra wealthy, hedge funds, venture capital, private equity, all of that kind of stuff. those guys, they get to pay a lower tax rate on their income. So let me just show you this for visual. Carried interest, how is it taxed? Carried interest is a type of compensation paid to general partners of investment funds. Typically, general partners receive two types of compensations: management fees tied to some percentage of the value of the managed assets, and then carried interest tied to some percentage of the profits generated by those assets. Now, while a management fee is taxed as ordinary income at a top marginal rate of 37%, carried interest on assets held for more than 3 years is often treated as long term capital gains with a top rate of 20%. Investment income may also, skip that. And because it's taxed as capital income rather than compensation, carried interest is also not subject to the 15.3% self employment tax. So essentially, all in all, the rich guys, they get a lower tax rate, which is not fair. See, this ordinary income, 37%. Their long term carried interest, 20%. Self employment taxes, ordinary income, 50%. Long term carried interest, 0%. You see what I'm saying? Pretty self explanatory. They're getting lower tax rates, they're paying less in taxes. And with these tax priorities, he would be doing away with that loophole, which is great for us. We hate to see the rich get richer. We hate to see the rich get richer, and they don't need more loopholes. We do. See what I'm saying? Now, tax cuts for made in America products. This is pretty self explanatory. This is something that Donald Trump wants to do is to incentivize American companies to produce more goods in America, to strengthen our manufacturing. You know, you make goods here, pay less in taxes. See what I'm saying? It's literally that simple. It's literally that simple. It's a tax cut for American companies doing manufacturing over here in the United States. It's what he wants. It's what he believes is going to strengthen America. And, that's part of his tax priorities. So those are the tax priorities. Those are the tax cuts. I don't think he'll have any issues getting any of these things passed through. Some of them benefit, the middle class. Some of them are taking away tax benefits and loopholes from very, very, very high income earners. We'll see. We'll see what happens. But that's it. That's it. Please like, share, subscribe if you got any value from this video. Thank you for tuning in. See you on the next one.